I'm often asked by clients what they should be doing to get ahead. And with most things in life, the simpler the strategy, the more effective it can be. At the moment, we've got a really low interest rate environment. It may not feel like it because interest rates have been low for a really long time. But at high threes to very low fours, we're running at about 60% of the long-term average in terms of where interest rates are at the moment. Credit card interest rates are in the low to mid 20%, which is criminal, but that's a topic for a little bit later on in this series. So what I wanted to do over the next few weeks is just talk about a couple of the things that you can do to get ahead in your mortgage and in your family finances generally. So the first one's probably the most obvious. Don't pay more than you need to. Once you've identified a strategy and loan products that work for you, and you've identified exactly what suits your circumstances, you then want to make sure that you're not paying over the odds in terms of the interest rate. So if your home loan doesn't sound like what I've described a little earlier in terms of being, high 3% or very, very low 4%, depending on your circumstances, you may need to get a better one. Let us help you research that. Probably to spell out the power of doing this on a regular basis, is just a simple calculation. Let's take a $400,000 home loan at an interest rate of 4.25% and compare that to what a saving of 30 basis points, so getting your rate down to 3.95% will do. Your savings in interest over the life of the loan will be around $25,000. In terms of the life of the loan, this means almost 2 years worth of extra repayments that you don't need to be making. So definitely a worthwhile exercise, and it's something that's worth doing fairly regularly. If you want to run the calculators for your mortgage, have a look at my website calculator page. The link is in the blog below. A word of warning though, in terms of rate shopping, it's important to compare all aspects of the loan, make sure that it fits with your strategy, and understand any hidden costs or particularly any post-settlement inflexibility that could be really, really expensive when you need to make a change. I guess the thought I'm wanting you to take away from this is think really, really cheap airline tickets, but your home loan is a much longer journey. Also be careful of lenders looking to buy business with very low headline rates. We see this every now and again where a lender will come up with a great special that looks really, really attractive. In the background, because we know the industry, we're really familiar with interest rate movements, and in some instances those lenders may be an interest rate increase behind the rest of the market. So you could find that you go through the cost of refinancing only to end up in the same position or potentially worse off. Let us do that legwork for you and help you really understand what's out there. Another thing that's really important in terms of interest rates, once you've got a competitive home loan, is keeping it competitive. So rate creep is where the banks make a fortune off borrowers. And you'll have noticed this, no doubt. The Reserve Bank increases interest rates. Lenders will up the rate almost immediately. When the Reserve Bank decreases interest rates, lenders are a lot slower to pass it on, and often won't pass on the full rate increase, leaving you just a little bit higher than you were before. It's also fairly common in recent months. We've seen out-of-cycle rate increases. The Reserve Bank hasn't changed the cash rate at all, but lenders are citing international funding pressures as the reason for increasing home loan interest rates, some lenders more than once in recent months. At the same time, to remain competitive, the banks are offering deeper discounts to new clients. And this is where it's really important that your interest rate is renegotiated, because over time you will end up paying more. We review our clients' loans on an annual basis to manage against exactly that, the rate creep. Over this financial year alone, we've saved our clients that we've done annual reviews for around $63,000 a year in interest. And that doesn't include the clients that we've moved into better structured, better suited, well-priced loans. So those annual reviews are really important. On the back of the Royal Commission, the tightening of lending standards, a lot of people feel that it's too difficult or virtually impossible to refinance to get a better deal. That isn't necessarily the case. We've had a lot of success where lenders won't budge on existing rates, we've been able to get clients a great deal somewhere else. So let's not buy into that, because that sense of not wanting to do anything because it's too difficult to go straight to the bank's bottom line and is potentially coming out of your pocket. Have a read of the blog below, check out the calculators, and if you'd like to find out a little bit more about this or have a look at the rate that you're paying, see if you could get a better deal, give me a call.